Good day, everyone. Thank you for your attention. In this presentation, we will explore how AI-driven quantitative private equity funds are influencing corporate governance in China, focusing on Quant as a case study. Our research examines whether these funds, which use big data and artificial intelligence, can play a more active and effective role in improving corporate governance compared to traditional institutional investors. By the end of this presentation, we aim to answer whether these funds, such as Quant, can improve governance practice and how this approach compares with more traditional models, particularly in South Korea. In the recent years, quantitative private equity funds, particularly Quant, have gained significant attention in recent years. These funds differ from traditional institutional investors as they are AI-driven, relying on big data and advanced analytics to monitor companies and identify potential governance issues in real time. Unlike mutual funds or insurance firms, which typically hold small stakes with short-term trading goals, quantitative funds like Quant typically hold larger stakes in companies, sometimes around 3.2%, and use AI to actively intervene and address governance problems quickly. This raises an important question. Can these AI-driven quant funds create more substantial and effective governance improvements compared to traditional institutional investors? Our case study focused on Quant's intervention in Daily Interactive, a company listed in Shenzhen. We will also compare China's models to South Korea's institutional activism to understand how this approach differs in practice. The market for quantitative funds in China has expanded significantly in recent years. By 2025, there will be 91 private fund managers in China with assets over 10 billion RMB, and of these, 45 are quant-focused funds managing over 430 billion RMB collectively. The rise of these funds has brought about a new wave of shareholder activism. Funds like Quant, along with Jiukun, Mingqiong, and Yanfu, from the big four quant funds in China. These funds have accumulated substantial assets and influence, and their strategy of holding larger concentrated ownership stakes allowed them to exert more influence over corporate governance. This contrasts with traditional institutional investors, which hold smaller stakes and often have limited capacity to engage deeply in governance. The key question remains, can these AI-driven funds improve governance in a way that traditional investors cannot? Our study is guided by 4 central research questions. The first question asks how quantitative funds intervene in corporate governance. Specifically, we examined whether they influence governance through ownership stake, by submitting shareholder proposals, or through AI-driven monitoring of management. The second question investigates whether these intervention results in tangible governance improvements, such as reducing related party transactions, increasing board independence, and improving transparency. The third question explores how AI enhances this intervention. Does AI allow these funds to detect governance issues early and take more timely actions than traditional investors? Finally, the fourth question compares China's approach with South Korea's institutional activism model, which traditionally involved long-term deep engagement with portfolio companies. By addressing these questions, we aim to assess whether AI-driven quant funds can be more active than traditional models in improving governance.
The theoretical foundation of our study is based on shareholder activism theory, which suggests the larger ownership stakes confer greater power and incentive to influence company decisions. Traditional activists typically acquire 5 to 10% of shares in a company, using their stake to push for changes, such as increasing board representation or improving transparency. In the Chinese market, ownership is often more concentrated with founders or state-owned entities, and even a 3 to 5% stakes can provide significant influence. Phantom Quant fits this activist model by holding an average of 3.2% in its target companies, allowing it to push for governance changes, such as adding independent directions or enhancing transparency. Phantom Quant's approach is a textbook example for this theory in action. Their high ownership enables them to propose a new director, which leads to a more independent board and ultimately aims to increase firm value. In China, the regulatory environment plays a critical role in shaping corporate governance practices. The China Securities Regulatory Commission is instrumental in enhancing governance standards through various frameworks, including the Corporate Governance Code for listed companies and the Company Law. These regulations provide the legal foundation for shareholders, such as Phantom Quant, to exercise their rights, such as submitting shareholder proposals and engaging with management. For instance, Phantom Quant uses regulatory frameworks to propose adding a data security expert to the board of Daily Interactive, a proposal that was passed with 68% of shareholder votes. These regulations ensure that quantitative funds can act as responsible shareholders while staying within the boundaries of the law. This regulatory environment enables the AI-driven activism seen with Phantom Quant to be both effective and compliant with China's corporate governance standards. In mid-2023, Phantom Quant became the second largest shareholder of Daily Interactive, holding 14.5% of the company's shares. This significant stake allowed Phantom Quant to exert considerable influence over the company's governance. The fund undertook several key interventions. First, it increased its ownership to counteract the dominance of the largest shareholder and ensure more balanced governance. Second, it proposed the addition of an independent director with expertise in data security, a proposal that passed with 68% of shareholder votes. Finally, AI-driven monitoring flagged irregularities in sales expenses, prompting an internal audit and leading to the termination of related party transactions. These interventions were aimed at improving board independence, transparency, and reducing insider risks. The interventions by Phantom Quant resulted in measurable governance improvements. The proportion of independent directors increased from 30% to 42.8%, significantly exceeding the industry average. Related party transactions dropped by 51.7%, demonstrating improved financial transparency and reduced opportunities for self-dealing. The share pledge ratio of the controlling shareholder decreased from 68% to 42%, which indicate a reduction in financial risk. These improvements demonstrate that AI-driven interventions by Phantom Quant led to substantial governance changes, all of which far outpaced industry averages for similar-sized firms. In comparing China's conflicts with South Korea's institutional activism, we observe two distinct models. In South Korea, activism is typically carried out by private equity funds such as IMMPE and MBK Partners, which take a long-term approach, investing for 5 to 10 years to bring about comprehensive governance reforms. This model is driven by the need to address the entrenched dominance of family-run conglomerates or chaebols in South Korea. In contrast, China's contemplative funds, such as Phantom Quant, operate in a market with fragmented ownership and a high number of retail investors. These funds leverage their technology advantage to quickly spot and correct specific governance issues, providing a rapid response model that contrasts with the more long-term approach of South Korean funds.
Now, to make this comparison a bit more concrete, on this slide, I briefly compare Phantom Quant with a representative Korean activist and BK Partners. In China, Phantom Quant typically holds a mid-sized but still influential stake, on average around 3 to 5% in many holdings, and as high as 14.5% in the case of Daily Interactive. It uses AI systems to monitor many portfolio companies in parallel. When the algorithm flags something unusual, for example, a sudden spike in sales expenses, Quantum does not try to take over the whole company. Instead, it steps in with very targeted interventions, proposing one independent director, pushing the firm to clean up a specific related party transaction, or encouraging the controlling shareholder to reduce share pledges. By contrast, MBK Partners in South Korea follows a much more traditional private equity model. It usually acquires a very large ownership stake, sometimes close to control, in a single company and then works with the management over a 5 to 10 year horizon. Rather than relying on real-time algorithmic monitoring, MBK focuses on restructuring the whole business, reshaping the board, redesigning the capital structure, and changing strategy across the entire firm. So, if we put these two side by side, Quantum's activism looks like a tech-enabled, minority shareholder style. It is fast, data-driven, and issue-specific. Korean private equity activism, represented by MBK, is more control-oriented and comprehensive, slower but deeper. Both approaches can improve governance, but they operate on very different time scales and depend on very different tools. Our research reveals that AI-driven quantitative funds, such as Quant, represent a new model for shareholder activism that is more precise and proactive than traditional institutional investors. Quantum's interventions, which included increasing board independence, reducing related party transactions, and lowering share pledge risks, were all measurable and substantial, far exceeding industry averages. These results suggest that AI-driven funds can detect governance problems early and act quickly to prevent them from escalating, making governance more preventive rather than reactive. Looking ahead, we plan to extend our research by expanding the sample to include additional companies across various industries in order to determine if the findings we stated in directive hold true in other contexts. We will also conduct regression analysis to confirm whether phantom quant interventions are causally linked to improvements in governance. Additionally, we aim to track the long-term performance of those companies to see if governance improvements translate into sustained financial performance. Finally, we will extend our cross-country comparison to Japan and to the United States to better understand how AI-driven activism is evolving globally.